Hello, this is Business Breakfast coming to you live from our studios here in Lagos, Nigeria's commercial capital. I am Frank Komalape. Well, it's Monday, the 24th January 2022. A key economic event to watch out for this week is the CBN Monetary Policy Committee this week. And so the first Monetary Policy Committee meeting of the Central Bank of Nigeria for 2022 is slated to take place today, Monday and Tuesday, January 24th and 25th, respectively. Well, it is important to note that the MPC is the highest policy-making committee of the CBN, and some of its mandate includes review of economic financial conditions in the economy to determine appropriate stance of policy in the short to medium term. The Monetary Policy Committee reviewed the CBN monetary policy framework and applied changes when necessary, amongst other functions. At its last meeting in November, if you may know, the committee voted to retain the monetary policy rate, otherwise known as the MPR, which is the benchmark interest rate at 11.5%. Now, other parameters look at the asymmetric window at 100 to 700 basis points around the MPR, the liquidity ratio at 30%, and the cash reserve ratio, that is the amount of money, talking about the amount of cash reserve with the central bank, that's about 27.5%. Well, according to analysts, it's not certain if there will be any changes in the rate. However, going by the antecedent of the Apex Bank, it might likely not happen since it's still early in the year. That's according to analysts. Well, let's quickly take a look at Nigeria's MPR, talking about the monetary policy rate in comparison to other African countries. So if you look at Nigeria now, it's 11.5%, and analysts expected that CBN is likely to review it. But take a look at Angola, Kenya, South Africa, Ghana, Uganda, you have Zambia as well. So if you compare these countries, Angola has about 20% rate, benchmark rate of interest rate, while Nigeria is about 11.50%, Kenya 7%, South Africa 3.75%, you have Ghana at 14%, you have Uganda at 6.50%, while Zambia is at 9.50%. So in case you're wondering what exactly is monetary policy rate, of course that's the CBN benchmark to determine how much of money, it will set the parameters for how much the bank can transact, and that determine other economic activities around the economy. And so that's, of course, a bit of information for you there. But this is the major event that experts and economists will be looking up to in the coming weeks. Of course, CBN meets today and tomorrow to take that decision, and that, of course, will likely impact on the business activities in the first quarter of the year. Well, on a Business Breakfast, we keep our eyes closely on this key economic meeting of the week, and this will form the major talking point on the show. But here's what's coming up in the moment. All eyes on the first Monetary Policy Committee meeting of the Central Bank of Nigeria, as inflation and other key economic policies expected to drive conversations amongst the committee. And also coming up, the Nigeria equities market continues a bullish trend ahead the CBN Monetary Policy Committee meeting this week. These, as investors are keenly watching, looking forward to a major policy review that will impact on the market going forward. Well, these and many more are some of the highlights of the show today. This is Business Breakfast. All right, let's take a break now. We come back. The conversation commences in earnest. We're back in a moment. Please stay with us. before we get into the conversation, let's begin with some trending stories in the world of business. The much-awaited Dangote refinery located at the Lekki Free Zone in Lagos State had been completed, and the facility will begin to run between August and September this year. Aliko Dangote disclosed these at the weekend in Lagos during a facility tour of the oil refinery, the fertilizer plant, and the Dangote jetty in the company of President African Development Bank Dr. Akinwumi Adesina. Dangote also mentioned that full production at the refinery could commence by the end of the year or the beginning of 2023. He also lauded the AFDB president and hinted that its polypropylene plant will be yielding about 1 million tons, which will bring about $1.6 billion in terms of export revenue to the country. Let's move away from that quickly. The Central Bank of Nigeria has taken a bold step in arresting the age-long practice of over-invoicing, which drug importers and exporters have over the years used to catch away the nation's forex, with its directive that effective from February 1st, 2022. All import and export operations will require the submission of an electronic invoice authenticated by authorized dealer banks on the Nigeria Single Window Price Portal, a trade monitoring system. The Apex Bank had explained in a circular at the weekend that the introduction of the evaluator and the invoice will replace hard copy final invoice as part of the documentation required for all import and export transactions going forward. The CBN circular also stated that the new system will operate on a global price verification mechanism guided by a benchmark price. The benchmark price is the actual spot market price obtainable at the time of consummation of invoicing in that market where the goods are traded. And now the Minister of Transportation, Rotimi Amechi, has pushed for an early completion date for the Lekki Deep Sea Port project, as he urged the contractors to accelerate work to enable government to approve all necessary processes before the next general election. The minister recognized that the Lekki Deep Sea Port project, which is designed to be the deepest seaport in West Africa, is about 80% complete and has before the end of this year as a target for completion of construction. Amechi made the disclosure while on an inspection tour of the ongoing Lekki Deep Sea Port project in Lagos, Saturday, January 22, 2021. Amechi stated that when operational, the Lekki Deep Sea Port will be automated as the bulk of the documentation will be efficiently done online. And finally, the deployment of fifth-generation technology has got a major boost as the federal government, through the Central Bank of Nigeria, has placed the telecommunications sector on the priority list for access to foreign exchange. The Global System for Mobile Communications Association in late 2021 said Nigeria needs about $500 million or 6,000 base stations to roll out 5G in 10 cities. The CBN's decision means telcos can now access adequate forex to acquire major equipment from overseas for 5G deployment and enhance their other forex-related activities. Well, and that's it for now with the top business stories. Coming up in a moment, after this break, we'll take a closer look at the first Monetary Policy Committee meeting of the Central Bank of Nigeria, as inflation and other key economic policies are expected to drive conversations amongst the committee. And that's in a moment. Please stay with us. Thank you for staying with us. This is Business Breakfast coming to you live from our studios here. So it's time to dwell on the conversation now. The fourth time in 2022, CBN Monetary Policy Committee is slated to meet today, January 24th and Tuesday 25th, respectively. At the last meeting in November 2021, the committee voted to retain the monetary policy rate, which is the benchmark interest rate at 11.5%, and other key parameters as well. So let's look at the impact this will have, this new, or what is likely to shape the discussion or the conversation of the committee in the first meeting this year. So Dr. Moda Yusuf is CEO, Center for Promotion of Private Enterprise. He joins us via the Zoom platform now. Thank you for joining us. Doctor, we appreciate your time. All right. The CBN Monetary Policy Committee meets today and, of course, tomorrow as well. And it's expected to last you tomorrow. And so some of the key issues are something like inflation and all of that. What are your expectations, especially this is the fourth time in the year that the committee will be meeting?
Well, Happy New Year to you once again.
Oh, Happy New Year. Good to have you. Good to have you again.
Yes. My expectation is that the rates will be retained. I say this because the economy is still struggling. You know, for most part of last year, what we had was a retention of rates. And the CBN was retaining the rates on account of the fact that the economy is yet to fully recover from the shocks of COVID-19. Even though Q3 last year, the GDP growth was 4.03%, we haven't had the GDP growth for Q4. But we know that even the 4.03% was also largely on account of what we call the base effect. Many sectors are still struggling to be back. Globally, we are still having feelers of some challenges around the Omicron variant and so on and so forth. So to the extent that the economy is still struggling, I think this may not be a good time for the central bank to be tightening monetary policy. Secondly, when we look at the challenges of inflation, if you look critically at it, the bigger component of the inflation issues are not strictly on account of the monetary phenomenon, although partially there's a monetary component, but largely the key drivers of inflation are supply side issues. Things like insecurity, which has been affecting the agricultural output and therefore having a pass-through effect on food inflation. Things like the energy costs, the cost of diesel, the cost of gas, which has been affecting the cost of production. We have challenges of logistics, cost of transportation, and all of that. All of these things of either the MPR or CRR or liquidity ratio can impact on this. And in any case, the monetary space is already very tight.
Hello, Dr. Moda. Hello, Dr. Moda. Can you hear me? Dr. Moda, if you can hear me, I was going to follow up with a question. You were talking about the base effect. Can you hear me?
I can hear you.
Okay. Just before we go to the base effect you were talking about earlier, as regards the performance of the GDP in the last quarter, let's look more. The MPC committee is expected to look closely at the inflation trend vis-a-vis fears of capital reversal associated with the monetary policy normalization in the U.S. and other advanced economies. For instance, U.S. December inflation was up by 7%, while Nigeria's December inflation reversed previous downward trends to settle at 15.63. How is this likely to shape MPC's decisions?
Hello, Frank.
Yeah, can you hear me?
Yeah, there was a little break. Yeah,
Oh,
you are
oh,
talking about monetary policy normalization.
yes, because when you look at other economies, for instance, you have the U.S. inflation. December inflation was up by 7%. Nigeria's inflation reversed the downward trend we're witnessing, that was witnessed for 8 consecutive period. Didn't happen. It was reversed, and now we have inflation at 15.63%. So I was asking, how is this likely to impact or influence the NPC's decisions?
Well, the increase in inflation was just about 0.23%. I'm talking about when you compare the figure of the last figure that you had, which was 15.63% to 15.4%. So it's really a very marginal increase. And my guess is that we had that increase as a result of the consumer demand during the festive periods in December. I think that is what actually made the difference. So generally, even at 15 point something, 15.63%, it is still quite high. Of course, there may be need to, be looking at interest rates vis-a-vis capital flow reversals, vis-a-vis the normalization of interest rates in other global and in other economies, particularly the US. So that may have implications. There may be a temptation to look at how we can, push up interest rates in order to stem or avoid capital flow reversals. But the reality is that because of the foreign exchange challenges that we have had, because of the liquidity problem that we have had, not much of inflows had come in over time. So there isn't actually nothing much to flow out. Because even as we speak, many of the foreign portfolio investors or foreign investors that want to take their funds out are having difficulties taking them out. So the foreign exchange problem, predates this normalization. So there may not be any significant change because that we have not witnessed any significant inflows because of the signaling effect that the liquidity crisis in the forex market has created. So we don't even have so much funds that may want to flow out on account of the normalization of monetary policy regime in the United States and other parts of the world.
Well, it's still, let's dwell a bit on that. The CBN, a lot of people are saying that the CBN perhaps will be looking closely at the European Union PMI data, talking about the price managing index and the purchase, the commodity price index. Why the US GDP and PCI figures will come out this week. So already the Federal Reserve is giving Nigeria conditions, more stringent conditions to access loans, and that's why they came up with the fact that Nigeria needs to devalue the naira and raise interest rates. So, you don't think this will make any difference at the meeting?
No, I think the major issue with the CBN has been the manner in which the CBN is managing the foreign exchange market. That has always been the issue with the IMF, with the World Bank, and even with some domestic analysts as far as the CBN is concerned. I think that is a major macroeconomic issue that we are dealing with at the moment. So if there is any engagement around the CBN's role in the macroeconomic environment, I think the bigger engagement will be around the foreign exchange management. In other words, there has been a clamor for a flexible exchange rate regime, which the CBN, for some reasons, has been resisting over time. So if there's a shift in that direction, maybe that may meet some of the requirements or address some of those concerns that are been. And of course, on interest rate, perhaps something can happen, but generally, the domestic issues, the domestic policy environment is a much bigger issue as far as attracting capital is concerned. Unless we address those domestic policy environment, especially around the forex, we may not be able to make much progress as far as capital flows is concerned.
Okay. So you don't think that the CBN is likely to heed the calls of World Bank that is asking Nigeria to devalue its naira and, of course, to leave dollar to flow, as it were?
No, it depends, because the CBN has been a bit rigid as far as this is concerned. I mean, we have been on this conversation for over 2 years, and there has not been any significant movement. I mean, look at the premium between the official window and the parallel market window. It's well over 100. So well over 100 naira. You know, the best practice in management of this kind of situation is a premium of just about 5%. But here we are dealing with a premium of close to 50%. That is very significant. And we have seen that there's this rigidity on the part of the monetary authorities as far as this aspect of monetary policy is concerned. So unless there's a shift, and I'm not seeing any serious indication that there will be a shift under the current leadership of the CBN.
Okay, let's dwell on this now. Let's look at some of the macroeconomic policies of the CBN. The Apex Bank disclosed that they were going to, improve access to finance and credit for households, small and medium enterprises in the new year rather. So, given these subsequent interventions in manufacturing, you have CBN's intervention in agric sector as well. For example, you have the Anchor Borrowers Program out there. And so the question really is, because some people are already saying, some experts are already saying, we do not really require CBN experts or see policies that will impact more on the naira than some of these interventions we are seeing from the CBN. So what is likely to change this time?
Well, I'm not seeing anything changing significantly. What I do know is that the CBN has been very bullish in terms of driving credit in the sector. We have the loan to deposit ratio at 65%, which has been putting a lot of pressure on the banks. We have the differentiated CRR, which is also, to encourage the banks to lend to the real sector. We have the Anchor Borrowers Program, and we have various initiatives to the development banking institutions, and we also have quite a number of interventions directly from the CBN through the National Microfinance Bank.
Hello, Dr. Muda. Well, I think we just while we wait to connect with Dr. Muda Yusuf, who will be giving us insight into the MPC meeting, all eyes on that meeting. And so let's look at some of the information before we go to our discussion. If you look at the inflation figure for Nigeria, it's at currently 11.5%. The last meeting that the CBN or the committee met, they decided to leave the rate at 11.5%. But if you look at the trend by the Central Bank of Nigeria and its Monetary Policy Committee, they've left this rate for almost all through the year 2021. And so, I think we have to dwell more on that. I'm aware Dr. Muda Yusuf is connected back to us. Thank you for joining us again.
Thank you.
Yeah. I need you to land on your thought, and so we can look at some other issues. You were talking about the fact that the CBN have been driving credit to the real sector.
Yeah, the CBN has been doing quite a lot in that space. Although there are concerns, first, about the quality of the intervention funds, whether the rate at which there is default rate with respect to some of the intervention funds are quite high, particularly the component of intervention funds that are being administered outside the deposit money banks. For instance, the Anchor Borrowers Program,
all right,
default rate, I think, is well over 50%, and of course, there's also the issue of who bears the credit risk. The commercial banks are a bit reluctant because the risk of lending to the real sector is high. The risk of lending to SMEs is also high. So there's a need to put in place a de-risking framework to de-risk that space, the real sector space and the SME space, so that the commercial banks can do a lot more in terms of advancing credits.
Just before I let you go quickly, Dr. Muda, just if you can do this in 30 seconds, that will be fine. Give us your outlook. You have said earlier that you do not see the Central Bank Monetary Policy Committee reviewing the interest rate. What's your outlook for the economy in the year 2022?
Well, the outlook is that, we are in an election period. So there's a lot of spending, election spending will take place from the politicians. The lending, the debt profile is likely to continue to increase on account of the fact that the revenue situation is still generally very weak. The inflation situation may not change significantly. And of course, oil revenue is likely to do a lot better, given the scenarios that you are seeing with crude oil price and so on.
Well, I think you need to leave it there. Thank you so much, Dr. Muda Yusuf. He is CEO, Center for Promotion of Private Enterprise, CPPE. Thank you for your time on Business Breakfast. You're still watching Business Breakfast coming to you live from our studios here. After the break, the Nigeria equities market continues its bullish trend ahead of the CBN MPC meeting, as investors are keenly looking forward to a major policy review that will impact on the market going forward. Well, that's a talking point when we come back from this break. And Bruce Amodian will be joining us live here to discuss further on this. We'll be back in a moment. Please stay with us.
Mama, you're coming to Lagos. Banga. Baby, Mama just called me now. She's coming to see you. She asked me to tell you to make banga soup for her. And she's close to the house. Oh.
How do you expect me to prepare banga in just few minutes?
I have a solution for you.
Really?
If you no sabi cook the banga, you no go enter my family.
Pali banga is used in making other exotic dishes such as banga jollof rice, banga efo riro, banga asaro or yam porridge, banga egusi, and many more. Pali banga is easy to open, no preservatives, no cholesterol, and no coloring. Approved by NAFDAC. Manufactured by Pali Agro Products Limited. Available in all leading stores and supermarkets nationwide.
Pali banga, natural palm fruit extracts for tasty African cuisine.
Powerful looks command respect, they say. The perfect body, the perfect grooming, and ultimately the perfect skin. Looks, style, and grooming makes the ultimate man. Found a ridiculously easy way to make my skin always feel epic. My name is Neo. I found Blemiviv, and now my skin finally makes sense. Most people don't understand.
Glad to have you join us now. This is Business Breakfast. Second part of the show, we'll look at the Nigerian market and look at the weekly review. And ahead of the NPC, of course, the market, it's expected to react to the Monetary Policy Committee meeting slated for Monday and Tuesday, 25th of January. And so let's look at the market as at the close of last week. Week on week, the board started the week on a positive note while market sentiment remained mixed, with occasional bargain hunting. The NGS All-Share Index closed the week on a positive note with a rise of 3.38%. The Nigerian exchange gained about 809.62 billion naira, while year-to-date performance rose to 7.59% from the previous at 7.43%. The market capitalization as well settled at 24.76 trillion naira. If you look at the sector in terms of performances across all sectors tracked at the close of trading on Friday, the NGX oil and gas sector was the highest gainer for the week with about 5.21%, while NGS insurance recorded a decline of 0.27% industrial goods, NGS main board, and look at other sectors there, already went up. So if you look at the oil and gas went up by 4.37%. And some other sectors. So we'll be looking at that across the board. Mr. Ambrose Amodian, regular analyst on the show, is the Chief Research Officer, Investor Consulting Limited. He joins me live on the program here. Thank you for joining us.
Yeah, thanks for having me again.
Yeah, so let's look at what drove the market last week. We've seen a lot of activities. Last week, we saw that the market broke through the 45,000 reading as at last week. That's in 13 years, you've seen the market has performed from what we last witnessed in 2008. So how would you address it? Because some experts are saying perhaps it's an excitement that something was going to happen at the MPC meeting.
No, actually, no, I won't say that way, but there are some factors that are responsible for this movement. And also, if you look at the market history, for almost 14 years now, 15 years, the market has always has a kind of a top. We call it top in technical analysis. When it get there, it pull backs, it correct, it goes up again. It tells that market is never on a straight line, either an uptrend throughout or downtrend. Market oscillate, and this volatility is what creates an opportunity for investors to buy low and sell high. And that is why anywhere in the world, equity market is too sweet to play if you understand this volatility and know when to kill at the right time. As you just said, for the week under review, if you look at the market for the straight 3 weeks, market have been in the green. It tells you that there is factors supporting the market, and those factors are still intact. Apart from the MPC meeting we are looking at that started already this morning by 10 o'clock, till Tuesday afternoon to see the outcome, and that was to form where the market will go from there. But today, the statement or the let's say the opening of the market today, you see that the market is a bit slow in expectation on to see what will come out at the end of the MPC meeting. But I will tell you from our own point of view that it is too early for MPC meeting at this point. The first meeting in the first for 2022 to adjust interest rates up or down. I think they will still adopt their strategy of
maintaining.
Let's see what will happen. And also, don't forget that the Omicron is on the ground as we speak, and the month of December, inflation just take up a little. For me, they want to watch and see. And also, we're already entering also this is the planting season also. We expect that he said what happened in December, which we know because we've already been querying why is it that inflation is coming down for almost eight straight months. For December, we'll see an update. He said it was attributed to insecurity and the demand for goods and stuff because of the festive period and all this stuff. Fine. But let's see what happens going forward.
So you don't see that MPC was going to have any, or market was going to react to that decision?
Naturally, market will want to wait to see the outcome. When they retain the MPC meetings, the MPR, let's say, on change, it will attract more funds. Because on the short run, equity market will become attractive for you to make returns because of dividend paying period is around the corner. And when it comes, and most of the fixed income return, that you take it for 1 year, you can make such return in less than 3 months or 6 months in equity market because of dividend payment. On that note, many people or many investors or fund managers will likely switch their investment to equity for a short time before, because I believe that if what we are seeing globally, the trend we are seeing that inflation is rising globally, then going to the future, into the year, we might see that they might likely start tightening our policies here, but it can't be on this first meeting or the second one. I mean, I believe from the April one, they can start talking of adjusting. For this first and the second one, I don't see them because the team actually are looking at factors that will drive growth. And you see that we have not seen the GDP for the last quarter of 2021, but you can see that even the GDP, the second quarter was 5.01. The third one was 4.03. You can see that we are not seeing that growth. We want to see if the growth are slowing down. Then we also see that we are entering another full year with Omicron on ground. We don't see them jumping into increasing rates now, because if you really want to drive the economy, you can't just copy what other mature economy is doing because they want to. But even the mature economy, they will not even increase their rate. They are discussing it that yes, inflation is going up. If we want to wait and see where we are going from here before I see the committee voting for
Mr. Ambrose, I will be touching up on the bits of pieces and here and there, what the market will look like in the week after the MPC meeting decisions and all of that. But I want us to dwell quickly because of our time on the oil sector. The oil sector did about 4.37% as at last week. But if you look at the latest OPEC monthly oil market report, we're getting that Nigeria's production in December 2021, based on direct communication, fell to about 1.1 million barrels per day, because expectation is that should impact on the performance of the oil index on the NGS. How will you react?
Actually, so the sentiment in the market as regarding to oil performance in terms of price, but in terms of our output here, we affect our own income as a nation. But for the sector that are on the exchange, they are still doing their business. It is the nation that will feel because we are not producing enough that is supposed to, it will affect our reserve. But still, now that the price is up, it can make up for us on the short term, because price is high compared to output now a bit. But on the long run, it will hit us, because if price go down and we are still on this level, that means we'll be asking for help. But now that price is up and it's fine, we can see global. For the oil sector, there's already a positive sentiment in that sector. And I told you earlier on this one that we'll have two major companies that are going to benefit from this, this rally in or recovering, or I will call it, in oil sector. One is Teplat and Wando. Another company that is not in oil sector is Cavaton. Cavaton is also in the transport or service sector. Cavaton is involved in moving most of the oil company here to offshore for their drilling. That means as far crude oil price is up now, their business is likely to be more, have more transaction with all those oil firms. But for Wando and the Steplat, I see that this will impact their bottom line. This is why I call it fundamental news that will impact the board. Only that Owando on the other leg, because we have not seen the result for a while, investors are really just speculating and also standing on leg investing in Owando. But for Steplat, because people have seen that Steplat's earnings have improved and they are consistent and transparent, you see that the price, that's why the price, one of the high cap stock, is still moving consistently because of the price, because of the crude oil price. For me, investors should just see that now and see where they should put their attention, especially as we are seeing that more earnings are coming this week, especially those unaudited accounts that started rolling in as from last week. For me, I see that the market will maintain that tempo, apart from waiting to see the outcome of MPC meeting on Tuesday. But from today, you see the filler will start coming from the market. When it will come, I believe it will guide investors. But I don't see them changing anything in this first meeting in MPC.
Let me ask you, I mean, we've seen the performances of the market in different sectors. Yeah. I think the worst hit, let me not say the worst hit, is the insurance sector last week, dropping about 0.27%. Where do you think investors are likely to put their fund this week, vis-a-vis the earnings report we're beginning to get and still trickling into the market, and what is the direction for the market for the week? Maybe you have to take us through that with the chart, with your live chart and all of that.
Actually, if you look at the market is already at around 14 to 13 years high. I tell you that market's on the uptrend and there are bound to be correction, and the correction will come in form of profit taking or pullback in terms of for that. See market, if we're on the chart now, I'll give you different support level that market has entered, and the top line I have broken to attain this level it is now. On this level, I see that this week we will expect a mixed market, because I tell you that any season is not about direction, it's about volatility. That means that any season is coming, people are going to react to these numbers up and down. If the numbers are good, then that means you are going to see a lot of volatility and a lot of income, a lot of liquidity and a lot of coming to the market, especially if the earnings beat expectation. On that note, I see that market was related, especially coupled with the outcome of MPC meeting during the week. We'll see market oscillating in the new week. But that tells that investors should not panic, because now they are positioning on dividend paying stocks, because the high capital have taken the market up, and because they are there, they are about to be correction or profit taking. For that, people are looking at which company do I know that will pay me dividend. That's where they are going. And don't forget that the market is, it's a makeup of traders and investors. Why the investors are looking at value and dividend income, traders are looking at capital appreciation. And if you have entered the stock that, for example, at 2 naira, and because of appreciation, it has gone to as high as 3 naira, and the company is declaring 50 kubu, you know you have made more than 1 naira, you like to take profit. That's why I say this period is about volatility, not about direction, because any season will give you a lot of information.
We'll have 1 minute to go, perhaps. Maybe you need to take us, where is the direction this week?
No. I've said earlier that I will expect a mixed market, but for January, likely to close positive, because this is the last full trading week of the month. We'll have money for next week. That means whatever happened this week and what market have year to date recorded about 7.59. I see the January closing positive to maintain the history of January being a green month. On that note, investors should not panic, because I see that earnings are around the corner. Last week, 2 mortgage banks released their numbers and they are impressive. For that, we expect that if that trend is maintained and we're expecting more earnings this week, the market should remain in this direction, but expect volatility because of profit taking and correction.
I think we need to leave it there.
No problem.
Let's just leave it there. Mr. Ambrose Amodion, Chief Research Officer, Investor Consulting Limited. Thank you for coming on Business Breakfast.
Yeah, thanks for having me.
Yeah. Well, we'll take a break now. When we come back, of course, we'll look at the commodities market from here before we close. We'll be back in a moment. Stay with us. All right, let's wrap it up now with the oil prices hitting the highest level since October 2014 this week, prompting renewed pledges from the U.S. administration to do what it can to relieve prices at the pump for Americans. Oil traded even higher than it did in November 2021. Back then, the Biden administration had announced that the release of 50 million barrels of crude oil from the Strategic Petroleum Reserve in a bid to lower high gasoline prices in a coordinated effort with other major oil-consuming nations. I think we'll have to leave it there. Well, this is where we call it a day or a wrap on the show. The Monday edition of the program. We'll be back again tomorrow. I am Frank Omalape. We'll keep our eyes still on the MPC meetings, which is slated for today and tomorrow, and wait for the outcome of that meeting on Tuesday. We'll see you again tomorrow. Bye-bye for now.